Hi and welcome to the Market Alert for Monday, the 8th of March 2021. I'm actually recording the first part of this on Sunday. There is so much news from Friday that I wanted to include it all, and it's taken a moment or two just to gather it all together. So let's kick off and have a look at this. So stocks and bonds slammed as good news is bad news narrative strikes. This is on Friday after the non-farm payrolls, which we'll get to in just a bit. The good news is bad news narrative is back, and this is something that's been used many times during the last 13 years since bailing the banks out. And of course you can see there the yield spiking to 1.6% during Friday's session. Again, we'll look at that in more detail. PPT, stocks are rescued by biggest intraday dip buying since the 2011 EU crisis bailouts. Yeah, I mean, that is basically it. That's all you can say. I mean, what on earth is going on, or what's coming down the line, more importantly? How long can this last? JPM slams Powell's catastrophic conference. Look toward the Fed's 17th of March meeting, where we may see Powell use his words a bit more judiciously. The FDIC chair says no need for SLR relief. This is liquidity relief for the banks. It's almost as if Biden's administration and some sort of progressive Democrats out there want the market to crash. That wouldn't surprise me. They can blame it on COVID, which is what they'll do in the end. One bank turned apocalyptic. The Fed will inevitably move to YYC, that's yield curve control, as rates are no longer anchored. No, they're certainly running away, and this is not good news. The dollar may rally in advance of YCC, but the announcement will likely trigger start of a great bear market in US dollar. Hold that thought. And Kashgari's stunner. If real rates spike, that may warrant more easing. Oh, more printing. I mean, they've just approved, as I'm recording this, the 1.9 trillion overnight in the US Saturday. They did this, stayed up and made sure it got through. No surprise there either. So a rise in real rates would give me concern, and that might warrant us considering a policy response. And that policy response is going to be like this. And this is from the UK in the Times, which you can see there. Safe to take interest rates negative, says the International Mafia Fund. So you can see here, this is absolutely incredible, frankly. Central banks may be able to cut interest rates by as much as 2 percentage points below zero without material side effects. What utter BS. How on earth can this not affect things? For the last 13 years, we've been told we're going to print 800 billion, that will stimulate the market, and every other stimulus package as being complete and utter BS. And it's always predicated on the fact that it's going to turn the whole system round, and the markets are going to be fine, the economy is going to be fine, and everybody's going to be fine. And it's just lies upon lies upon lies. And it is just sheer madness. Rinse and repeat, and get the same result. As Einstein said, this is the highest form of madness, and this is what we're seeing as we head towards the failing of the US dollar. Is temporary inflation a real thing? Well, don't worry, it's just temporary. Let's talk about government policy that's temporary. Go back to 9/11 when all of the restrictions were put in place and have never been removed as far as security is concerned in airports, etc. No sign of a terrorist anymore since COVID turned up, and now we have lockdowns. And if you do a bit of research, you're going to find we're going to be getting lockdowns to actually drop CO2 emissions now. Nothing is ever temporary that the government puts in. It is a new paradigm and the way that life will be. Just go back and look. I've only cited 2 examples there, but there are many more. As Dylan Grice warns, own gold. Central banks are going to overcook the economy. You're damn right they are. Hyperinflation is definitely on the cards. I think Gerald Salenti described it in a video over the weekend where he talked about dragflation. There's going to be a drag, but then you're going to end up with this super hyperinflation that is going to come as well. I mean, you have to go shopping every week to see this. Said it for years that they keep doing this. So on Friday, you will see, if I've got the chart here, let me just bring this to where I believe is the highest point, is there, and you will see that the yield got to 1.6 on Friday. It got slammed back to the downside, as you can see there, before it started to move back up again to the 157 area. I'm just going to bring up the Dow, because this is when the PPT, the plunge protection team, got into the market. You can see they came in around 430-ish, and that was it. The market was absolutely ramped back to the upside. Again, they'd lost control. The news was good. This is the non-farm payroll figures. The news was good. The market was then, again, the good news was turned into bad news narrative, and then prices had to be supported by the plunge protection team. And here you can see this is an 820 point move back to the upside for the Dow, and that's all thanks to the PPT coming into the market and rescuing the market, because they can't afford for it to actually crash. If they do, then it's game over with all of the illusion that they've been and pretense that they've put forward since 2008. So they're going to do the best to try and hold this market. So that's what happened during Friday for the Dow, where they tried to bring the market back. So let's have a look at what the market's doing right now on the overnight market, and then as ever we'll conclude with looking at the German DAX and how it traded during Friday, waiting for the non-farm payroll figures. Okay, just before we get to the overnight markets and see where prices have opened following Friday's PPT intervention, we can see that the implied volatility moved lower on Friday as a result of this. You can see the DAX there, the Dow moving down to 19.95 from 21.34. And also this has turned it back to amber at the moment as well, because prices managed to rally and close above the 20-bar moving average. Just a quick look at the overnight yield. The 1.58 is where we're at the moment, as it still holds around that 1.6 level, which was the high on Friday. So again, keep an eye on this. And the news this week, whilst we're here, we've got Bailey speaking today at 10 a.m. No news Tuesday, absolutely nothing. Wednesday we've got CPI, core CPI for the US, and crude oil inventories as well. Crude oil's really getting the motor onto the upside at the moment. We've got a bond auction as well, 10-year this week. That will be interesting as well to see what this goes out at. And on Thursday we've got monetary policy statement from the criminal Lagarde, and refinancing rates, and also she's speaking at 1:30 as well. So not a lot of news this week, so the market's going to have to make its own mind up, particularly tomorrow and Friday. No news at all. Okay, let's have a look overnight. We'll start off with the Dow, and you can see how prices were brought back on Friday. Lots of buying as the plunge protection team came into the market and drove prices to the upside, stopping at the 78% retracement on the overnight from this high to this low. Prices managing to work their way there. So at the moment, looking pretty weak for the Dow and also for the DAX as well. You can see prices gapping up on the open as playing catch up to the PPT's intervention. It's going to need a lot more than that to keep the markets on the highs. But you can see prices already coming back down to the 5-bar moving average overnight, and heading back down to Friday's low is only just below the 50% 62 area as well. So keep an eye on this one. This one's going to be very important should prices continue to the downside there. And overnight you can see the gap up to the R1. Prices moving lower, then putting in a double top, which you'll see across there, and then moving to the downside, turning red. You can see the selling coming in at this area here off this bar where he put in the double top, and then further selling coming in the next bar, broke the BRN, and then traded all the way down to Friday's close. Bit of a rally off this back to Friday's high, and then the market sideways until we broke, came back through the high. Again, you can see the selling coming in, tried to bounce back once we got through the 200 MA, driving through this level here, and then prices just sailing down to the DP daily pivot, again bounce off this, but then breaking this too, and sideways and bouncing off this at the moment and back to that DP level at the moment. The market's got its work cut out to move back to the upside. It certainly can do once the futures market opens, to get back to the previous day's high. And Friday's low is down here. If the market wants to sell off 150 points or 100 points, it would be by the time it turned around and moved it. But certainly, yeah, about 130 points that would be. So yeah, there's plenty of options either way. Once prices open at 7 a.m. there for the futures. But at the moment, it's all looking very weak. And this includes silver as well, which moved higher initially, but at the moment is struggling with the 25.50 level, which is just sitting at now. So they managed to bring the market up, but at the moment it's looking very, very weak, and alarmingly weak actually, to be honest with you. If we just have a look across here, you can see that on Friday we traded down to, there was a bit of buying pressure in these smaller time frames for silver coming off the lows, but to me it still looks very, very weak, and I'm not too positive on the upside at the moment. They're going to use any weakness in the stock market to keep driving these prices lower. Like I say, you can't get any physical of any great quantity anywhere, and this is just the paper just slamming the price. And they did this last March, which is when I got in at $13. So if they want to hammer it to the downside, feel free. I'll just buy more. But you can see across here at the 200 MA is around 23.95, which is at 24 level really, I suppose. So 24 really important. If you break 24 on the downside, let's have a look. You'll see that really the next level down is here, which is going to take us all the way to that 21, 22 level there for silver. So that's the downside targets for this market at the moment. Plus, obviously, you've got your fibs in between, but I think we're already down towards... yeah, we've already gone through. So actually, we've got a really important level here. Let me just remove these. Oops, draw that back in again. And let me zoom in. And just remove all of these other fibs here. You can see that the market actually at whatever price we've got here, 24.67 is not only support here where we had the sharp move to the upside, but also an 89% retracement from low to the $30 high as well. So we'll see. We'll have to see. But like I say, at the moment it's looking like we're going to come down and test the $24 area. That's what it's looking like to me at this time. Okay, so that rounds up what's happened overnight and what's likely to happen during today. So with that, let's move on and have a look at what the market did during Friday's session. So on Friday, the futures market open sent the DAX back down to the DP level. Market held here. So let's just fast forward through this to the open. And you will see prices selling off initially, coming down to the 200 MA there, going through this, through the close and heading towards the low, which we can see there. You'll see them just buying back in or attempting to buy back in there, slowing the rate, and then immediately we get towards the low. Within a few points, the market is brought back in. The shorts, having sent the market down, brought back in to bring the market back to the close there. So now the market's stuck in a sideways move. No surprise really, given that the market was waiting for those non-farm payroll figures at 130. So I'm going to push through this, and again you can see the market coming back towards the low. Eventually prices break through the low. As again, let me just highlight this point here. You know, we see the profit taking here. This bar that follows is 90% of the volume of the previous bar, gets stuck at the BRN, and then you can see them selling into it here, back below the 5 bar in this bar, and then back above, and then closing back below, and then resuming the current trend to the downside there. So prices hold at the low. It's a very important area, as you know from previous market alerts. And again, we see the market attempting to move higher, again failing, closing back below the 5 bar moving average. Having a look at the daily to see where the pivots, not the pivots, the fibs were that I actually drawn in Friday's morning's market alert. And again, look at the volume here as they attempt to buy back the market. Coming straight off that low of 1388.77 that you can see there, and an increase in volume. Prices then moving back towards the upside, stuck at the 78 and 89. We eventually turn green, and then we start to move to the upside and head back towards the close, before once again testing at the 5 bar moving average and moving back to the upside. So I'll just fast forward through here and now move the stop to break even. Now it's had a look through the 5 bar and moved back up, stuck at the 200 MA there, and given that the news is out at 1:30, we're more than halfway through the morning session as prices have got back to that 200. So a case of take the money off the table, even if prices move to the upside. But again, you can see the 200 MA there, and the volume in this bar, even though it's not greater than the previous bar's volume, the range is narrower, and it's about 89-90% of the previous bar's volume there. So there is a resistance there. You can always get back in if prices start to trend once more, but after this the market went into a sideways move, eventually breaking the 200 MA on 1 bar, and then the next 2 bars are back below the 200 MA, and we see prices then just drifting back to the downside there, all the way back down to the low, where again it finds support. You can see them buying back in here. And then as I move forward, we get towards the end of the morning session, which you can see prices just drifting back up there. So let's move on to the non-farm payroll figures. These were released obviously at 1:30. I'm just going to come back because I need to pick up something here for you as soon as I can spot it. There we go. So the payroll figures came out at 1:30. Huge payrolls beat ads, 379,000. You can see that the prediction was down here at 197, came out at 379. But what they failed to tell you was that 75% of all jobs added in February were waiters and bartenders. So that's an interesting one, isn't it? And again, that's because they're opening up hospitality. So basically, they're not new jobs. These are jobs where people were furloughed and then now have got their jobs back. So here we see the market's reaction to this. Of course, it's good news. So they send the DAX up 100 points, which you'll see in just a moment. I'd look at the yields as well. We were up to 1.59 on this news. And as this started to get out of control, the Fed obviously was starting to get a bit too twitchy. And then when the market opened, prices traded sideways. And then my data feed stopped, unfortunately, as it all stopped working. So unfortunately, I've got to resort to this chart, the 2-minute DAX for Friday afternoon. And we started off with the market moving lower. We've got a retracement here back to the BRN. Another sell as prices move lower. Then they attempted to move higher. And you can see all the way through this, if I just get the fib retracement tool, as the market opened from, well, just before the market opened, this high down to this low. If we just draw this in, you'll see the market stopping at 62%, which is at the BRN as well. Prices then reversed and moved lower, and then once again they came back from this high to this low to here, which we can see there is 78.89. I can see that there. So even off this long trade here, you can see the market's got a problem, not only with the fib, but also at the recent high. And I say the market went short then, so as prices moved down, and we got towards the end of the session again, prices failed to have any interest in the upside. But this is fascinating because here you can see the battle going on in this area as the plunge protection team came in to the market's aid. And you can see here, huge volume, narrow bar. They then move the market up, and then you've got numerous retracements in here before the market then managed to break and then move back to the upside along with the Dow. So yeah, a fascinating afternoon for Friday, particularly from 4:30, as we saw the plunge protection team bring in the Dow back that massive 800 points, the highest on record since the EU crisis of 2011. Okay, that will complete this market. It is a long one. Apologies for that, but there is a huge amount of stuff going on at the moment. Very difficult to keep up with. But that said, it's all fascinating stuff. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.